And we're live. All right, welcome. Doug Tabor here, CCIM, San Diego County Rental Property Broker. Checking in for the rental market update in San Diego County for the week of September 30th, 2024, last week of the month, first week of October. We are barreling towards a contentious election season, and certainly we're seeing that coupled with these higher interest rates. That's definitely affecting the rental market. But I have our report here that you're going to be interested in. So for the week of October 30th, as we get closer to this election, there's certainly going to be more concern about this rent control measure that we're facing here in California. Prop 33 could potentially wreak havoc on the rental market for owners and investors. The idea that it can eliminate the Costa-Hawkins Act of 1994. Basically, what that says is that local municipalities and governments cannot implement arbitrary rent controls that will certainly impact how an owner is able to manage their rental properties. And it could cause local jurisdictions to be able to get rid of what's called vacancy decontrol. What that means is that if you have a tenant move out, you're able to raise your rent to what the current market rent would be in the marketplace. Seems fair, right? Well, vacancy decontrol, if it goes away, it means that a landlord who, most of them, the independent owners at least that I serve, kept their rents extremely low. When they have a vacancy, they will be able to increase those rents to market rate. But if there's vacancy decontrol is not in place, then what will happen is they can only increase it to the 8.5% that say AB 1482, which is a state run rent control, would allow at this time. So the bottom line is many of the investors are concerned over the idea that there might be new rent controls, and the uncertainty in the market has certainly caused a lot of slowdown, at least for our listings. From a transactional standpoint, single family rental properties, multifamily rental properties, 2 to 4 unit properties, 5 or more apartment buildings have slowed down. There's probably about 50% less transactions this year than there were in 2022 and 2023. And that's certainly causing a lot of havoc in the space as far as those who are able to broker those properties. The good news is interest rates are coming down. We're kind of hovering around the 6% mark at the time of this recording. So that is good because we were at 8.5% last year and in the high sevens for the bulk of 2024. So the idea that the interest rates are going to be coming down will help the market. Certainly, it's giving investors a better look at the numbers. You know, the bottom line with Southern California real estate, as we all know, rental properties included, is that it's highly valued and it has high valuations. And we've been on a hot run terror for the last 5 years, and valuations have just been screaming, especially since COVID. And so the market is essentially cooling a bit. Area rents in San Diego County are pretty flat. According to CoStar, area rents are around 0%. Some markets are hitting 1% and 2%, but for the most part, area rents are around 0% in rent increase for the last 12 months. And that certainly is because vacancy rates have gone up. We've seen vacancy rates for the market essentially climb up to 5.3% on a county level for San Diego County. And if you know San Diego County, that's pretty high. Generally, our market runs like the 3 to 4% mark. There just is not a lot of new building here. We do have an incredible housing shortage all throughout Southern California and all California for that matter. So to see our vacancy rates go up to 5.3%, really what the experts and the economists think that's from is just the cost. It's just expensive to stay here. And some of the younger generations that are realizing that they can work remotely or they can go find work elsewhere in some of the cheaper markets nearby, maybe Phoenix, maybe people going to Texas. I mean, they're basically moving out of San Diego County and Southern California as a whole. And so what's happening is the market's just balancing itself out. You know, when the vacancy rate goes up, that means there's less demand. Less demand means that prices will drop a little bit, and that's why we're seeing those rents actually come down. In some markets, we're even seeing that owners and landlords have to put incentives, move-in incentives, renter incentives out there, maybe a free month's rent or 8 weeks free rent in order to get those properties to be occupied. So vacancy rates are up and rent growth is down. And really, that's kind of the argument of why rent controls aren't really needed. The bottom line is a free market will regulate itself in the form of supply and demand. So we're already seeing those rents come down because the vacancy rates go up. So in that regard, why would you need rent controls? As far as the number of new listings on the market, single family residences, there's 761 new listings with a total of 2,028 listings as a whole. That's about half what normally we see in this market. And sorry, that was for our attached housing. For our single family detached, total listings of 4,173, which is quite a bit lower. And that's why you're seeing our median sale price for the county up around $1,050,000. So $1,050,000 for median sale price of a home. Days on market are still relatively short, 19 days on market. And if you're wondering what that means, basically it's from the time a real estate agent will put the sign in the ground until the time it goes under contract. Those are your days on market. Anything under 20 days on market is just extremely fast. When you think about it, we put the sign in the ground. By the time you get a couple different showings, a couple different groups going through there, they write an offer, that's a week or two, and then we're going under contract. So in less than 3 weeks, once a sign goes into the ground, these properties are going under contract. So that's really, really short. That's really short for everybody. And that means that you still have a very strong single family market in San Diego County. For the 2 to 4 unit market, where I spend a lot of my time, the multifamily, duplex, triplex, fourplex market, total new listings are 129. Number of sales last month for about 57. But here's the kicker. Price per unit, $475,000 per unit. It's a lot of money for a price per unit on a duplex, triplex, or fourplex property. We have a number of listings that are out there that are around that price. I will say that the days on market for the month of September were 17 days on market, but we're seeing things slow down quite a bit. We are putting properties out there and not getting the slew of interested parties or calls that we have in the past. So I bet the October numbers are going to cool off quite a bit, probably longer days on market. I know with our listings, we have about 7 listings right now, and I think all of them are considered either multifamily or 5 or more apartment buildings, 5 or more unit apartment buildings, commercial. And they're moving through the system, but they're moving slowly. Price corrections across the board are happening all throughout the market, not only on our listings, but throughout the market. I just got an update last week that said 53% of all family sales have been price corrected, which means probably price reduced. So we are seeing price reductions across the market as well. For our 2 to 4 unit properties, median days on market is 17 days. So that's still relatively low for the month of September. And I usually take my look 30 days back. So whenever I do these market updates, I'm always looking at the previous month. So this would essentially be the month of September, since we're at the 30th right now. And then where we've really seen things slow down quite a bit are your larger apartment buildings, anything 5 or more units, commercial apartment buildings. We have seen a number of sales, only 25 sales in the last 30 days. But we've seen that cap rate start to climb up. So now at 4.7% on average for the county and 107 days on market. So once you get above, say, the 80 days on market level, you're essentially moving into a buyer's market. So we're seeing the bigger properties, the 5 or more apartment buildings. 60% of our properties that are apartment buildings are actually 10 units or less. So between 5 and 10 units is 60% of our market. But we are seeing those slow quite a bit. And the bottom line is, we just, as brokers, we need to really sit down with our clients and make sure that we're putting proper valuations on these properties. So again, we're really the entire market. Everybody is looking at this Prop 33. No on Prop 33 is the right answer there. This whole thing with Prop 33 keeps coming about. It failed as Prop 10 back in 2018. It failed again as Prop 21 in 2020, and now it's back as Prop 33. They're calling it the Justice for Renters Act. And the best justice for renters, as I see it, as a broker who works with both sides of the party, I'm working with the tenants, I'm working with the owners, is to just build more housing, get those rates down. As soon as the government gets involved or some group gets involved and starts trying to price fix things, there's a very limited group that's going to help. But for the most part, that's going to cause the kind of restrictions that are going to have developers go to other markets. I've already had clients that were getting ready to invest $10 million into this market, move it from an outside market out of the state, and they chose not to do it because they're concerned about rent control. So, I know a lot of people think it's the big fat cats or the hedge funds that are managing these properties. Really, it's not. It's the independent owner, especially in San Diego County, when 60% of our apartment inventory is less than 10 units. Those are owned by independent owners, the moms and the pops who bought these properties to just supplement their retirement. So I know it's expensive and it's rough to live here. That's just California. We just don't have enough housing here. We have a desert to the east, an ocean to the west. We have a big military base to the north called Camp Pendleton, Semper Fi Brothers. And then we have an international border to the south. So when you couple that with government regulation for the last 30 years that downzoned everything, which meant that builders couldn't build up to higher zoning, what we have is a shortage. And it's just the cost of living has gone through the roof. And certainly more restrictions are probably not the answer. Actually, less restrictions are probably the answer, and get more housing and start going vertical, which is what some developers are doing. I know the city of San Diego has kind of come to their senses. They're allowing developers to have some more leeway. But there's just it's a whole group of things that happened all at once that cause these shortages and cause prices to go up. So it seems as if developers continue to build, it will cause more supply to come onto the market, and it will loosen up that demand and prices will start to come down. So that's my rental market update for the week of September 30th, 2024. I hope you enjoyed it. And if you are interested in a written copy of this, you can visit rentalmarketupdate.com and you will receive the written monthly copy of the rental market update. If you're in need of brokerage services, reach out to us. You can visit my website at dougtabor.com. We sell apartment buildings and rental properties throughout San Diego County and are happy to provide you an updated property valuation or just some insight on the market if you're looking to buy or sell. That's my report for the day. Doug Tabor checking out. See you next time.